Now, as you can see, what we've experienced the last several weeks is truly an explosion right off of the 20 period moving average after experiencing about a month and a half of no progress. So starting from June, but what was very impressive about this is that your downward movements were not very sharp or enduring at all. So it was basically basing sideways toward the top of the move. I have to be honest with you, I'm not very happy about this, but I actually missed the last buy opportunity right off of that 200 period moving average in the middle of July, which led to this explosion. That should have been my last move. One of my favorite opportunities is to buy off the 20 period moving average. Now, look at the most recent explosion off the 20. Go back in time to a little past mid-May, another explosion off the 20 in mid-May. I want you to go back to mid-April, another explosion off of the 20 period moving average, which is the blue line. So take a look at mid-April, take a look at mid to late May, and take a look at mid to late July. All explosions off of the 20 period moving average. I took profits in three specific areas between 385 and 408. Okay, so 385. I took gains in the mid 80s, in the mid 90s, and at 408. So I took gains in three different locations. That's eliminated a third. Those three have eliminated a third of my total accumulated position. Now, what I would love to see is a pullback to about 50% of that last move up. So we would be talking about a pullback to between 300 and 320. I would love to see that. Will we get that? I don't know. It's holding up very, very well, which is an indication that we might not get that pullback. I want to put that 1/3 back in, but I want to put that 1/3 I took off back in at a lower price. And by doing this, getting out when your item is overextended and putting it back on at a lower price on the pullback, you can turn a $100 move into almost a $160, $170 move, so that the traditional buy and holder lives through all the pullbacks. When you play the pullbacks in a way where you actually turn out more profitable than the person who did not make those intra move plays. So that's what I'm trying to do. Wait for it to pull back to take the third that I came out on, put that back in at a lower price, so that when we come back to the equal price of where the top is, I'm actually more profitable than the person who did not do that. What if the 20 period moving average is pointing down above the 200 period moving average? That means that your stock is sort of in its own temporary trap zone. So you have a downward trend, but above the long-term uptrend of the item. So you have a long-term uptrend, but a shorter-term downtrend. That's conflict, right? So you want to wait for that conflict to basically work itself out. The very best plays are going to be when your stock or your item is above the 20 period moving average. That 20 period moving average is pointing up, and both the stock and the upward pointing 20 period moving average is above the 200. Most of your problems aren't existing in that scenario. That's what I call the power picture, the picture of power. You have very few problems as a market player when your stock is above the 20, your 20 is pointing up, and both of those are above the 200. The moving averages are simple in nature. Guys, I've been using moving averages for 26 years. And I have found no evidence that the sexier varieties of moving averages have any advantage over simple. So I stick to simple. In addition to that, Moving averages are to be considered as areas, not as these little thin lines as the chart would have you believe. What brokers can we use to operate actions with this method? Well, I've got two answers for that. Number one, I want to let you know that I'm not very familiar these days with retail brokers. I haven't used a retail broker since the early 1980s. I don't know how they operate. The professional trading space doesn't really operate in the retail brokerage world. So I really can't give you my personal experience about retail brokerage firms. I can tell you what I've heard. I can tell you that for the most part, if you are swing trading or core trading or well trading, longer term plays, basically any brokerage firm will do. You don't have to worry so much about pinpoint executions, which are very hard to get in the retail brokerage space. Now, when it comes to short-term trading on the retail space, what I have heard from traders who do this, not my experience, so that's the qualifier, is that Interactive Brokers is probably amongst one of the best if you're going to trade really active like a day trader in the retail space. It's very hard because when you're day trading, executions are paramount, and in the retail space you just can't get executions. You can't get good executions. But relatively speaking, I've heard that Interactive Brokers is one of the best when it comes to that. And as a side note, the owner and founder of Interactive Brokers was my neighbor right next door to me for 19 years. I've known him for a very long time, and I know he runs a very, very tight professional organization. Now, Victor's asking, so in my broker, well, it's different in the professional world and in the professional prop trading world, guys. I've been operating in the prop trading world since, the beginning of the 1990s. This is why I don't have much experience in the retail trading space. In the prop trading world, you bypass the broker. So the broker is actually a middleman or a middle organization. So it works like this. You're the trader, then you go through a broker. The broker then goes through a clearing firm. A clearing firm then goes to the market. You see how many people in between you and the market? That's not direct. So in the professional world, there's the prop trading firm, the clearing firm, and the market. So we're removing one of those spots, the broker. There's no broker, all right? So it's prop trading firm, clearing firm, direct to the market. So that's more the professional world. Now, some prop trading firms also own a clearing firm to actually eliminate even the extra hop for greater executions. We clear through Goldman Sachs. I think that's the answer you're looking for. Aviad is asking, Oliver, you're always saying that you don't sell courses. No, I don't sell courses. I used to for 12 years in my first company, Pristine, but I don't sell courses. So Oliver, you're always saying that you sell courses. You don't sell courses. You put traders in business. That's true. If that's true, he's saying, what about your wealth trading course, please and thank you? That is not a course. That is a club membership, if you will. So I do that. It is not a course. It is a club for life. We get together to basically scour the world for wealth opportunities together. We play those opportunities together, step by step, entry by entry, exit by exit. In this club, if you will, every move I make is actually told to the club before I make it, so that they get an opportunity to make it even before I do. Every time I'm about to sell a position, they know before I'm going to sell the position. So they get an opportunity to sell it before I sell it. This is a lifelong club membership specifically focused on wealth. It is not a course where on Monday or Saturday through Sunday, I teach you something, the course is over, I do a Hail Mary, shake your hand, and off you go. I'm not in that business. All right. So that's the difference between a club membership and a course that's just adios. I don't do that. Bikash is asking, please guide on frequently stop loss hits. Can you please give me some advice on frequently I'm frequently being stopped out, all the time. What advice can you give me? I think that's what you're saying. If that's your issue, you can have one of two or both problems at the same time. Let me explain. Number one, you could just be choosing your tactic, your method could be off. You could be choosing the wrong plays at the wrong time, which no matter how great your entries are, if your entries are on the wrong plays, you're going to frequently get stopped out. If you're buying in the wrong position all the time, you're going to frequently get stopped out. If you're buying at the wrong time, you're going to frequently get stopped out. So one problem could be your method, your tactic, your technique is off. Your position is off. That's potential problem number one. The second reason, let's say your tactic, your method, your technique is not off and you're buying near the 20-period moving average. You're buying at the right place, in the right time, in the right position. Those are the three things. You're buying at the right time, in the right place, in the right position. Let's say you've got that right and you're still getting stopped out. Here's the second problem. Your stops can be too tight. Now, I know that I'm always telling you traders, keep your risk unit small. One of the keys to success in this business is small losses, small losses, small losses. You should focus more on losing right than trying to make money. Most of you have the game backwards. You're trying to make money. Wrong. The market makes money. It's not your job to make money. Your job is to keep losses small. The market's job is to make you the money. Stop trying to do the market's job. Do your job. Keep your losses small. I get that, but you can take that too far. You can try to keep your losses so ridiculously small that you're just asking for the market to take you out on every single little tiny insignificant wiggle. So too much of a good thing can start to be a bad thing. You want to watch that. What's my ultimate goal in life? Guys, what drives me every single day? Two things. I want to leave behind a legacy, a body of work that traders, fresh and young, coming into this business, have a body of work to rely on that is solid, educational, informative, and real. When I first started in this business, that did not exist. And I made it a vow of mine to make sure that if I ever made it in this business, I would put the work in to put things out in the community that gives honest, sincere, wannabe traders like I was back in the early 1980s a fighting chance with some good material. Because let me tell you, out on the internet, there are tons of stuff that will ruin so bad, it will ruin any chance of you ever having success at this if you start taking that stuff in. So we've got enough of the nonsense out there, enough of the garbage, enough of the third-party information and knowledge regurgitated by people. We need real material out there. So every single day I wake up, I dedicate a portion of my day to putting some real content out into the world for you to rely on. That is a promise I made to my personal God all the way back in the early 1980s. If I ever made it, this would be part of my life's work. That's number one. The second thing I dedicate my life to toward my ultimate goal is a little more selfish than that. I want to bring Wall Street to Main Street in a way where Main Street, my group, becomes a force to be reckoned with. I want a group of traders that scours the entire globe for opportunities. And wherever there's an opportunity, I want me and my group or a portion of my group there. I don't want a single opportunity ever missed. I can't be all over the world. I can't be in the opportunity in Microsoft and Apple and Twitter at the same time. But as a team, we can spread out over the entire world we can spread out over every single market in the world. And wherever there's an opportunity in the world, whichever market, I want one or more of my team there. I want it all. Do you understand? So that's my ultimate goal in life, to be a force to be reckoned with, and to have that force be because I dedicated a portion of my life to bringing professional style trading to the regular person, Wall Street to Main Street. That's the theme. That's what I wake up every single day. How do I bring Wall Street to Main Street better today? Every day I ask myself that.